bro.
Time is over. I think I should start
Yes,
now.
bro.
I'm going to be doing a quick revision.
Yes, man. Yes, man. I'm here.
Oh my God. So you can kindly mute yourself, please. Let me continue. All right, good. So I'm going to do a quick revision on what I taught last, and then we'll move over to what we have for today. Then we'll call it a day, right? So just give me 3 seconds to check something here. Oh. All right, so share my screen. See you tomorrow. All right, so we're talking about the economic charts, its anatomy, like how what it's made of and what it really means. All right, so let's continue. Um, Now, there's something I want to tell you, which you will need to understand this chart very well. So in Forex, whenever you see something like this, right? If you encourage me to see something like this, what does it mean? Now it's simple. The meaning of this is that £1 make 153 Japanese yen. As you can see, the 153 here is the whole number, and the decimal point is before the zeros. So the actual number here is the 153. So this GBP equals to 15300. It means £1 costs 153 Japanese yen. That's the meaning of this. All right, take notes. So GBP equals to 153.00 means in the economic charts or financial chart of GBP right now, the price or the reading is at what? 153.00. Now, this is the meaning of this write-up, and it can be represented like this. For instance, you have this 153.00. Okay, so we have, so what's the meaning of this? Now, this means that in a specified period of time that normally you find written at this or beneath this line, they normally write the time frame or the time interval. It is in normal mathematical graph when they teach you x and y axis. The y axis will contain a group of or another element, and the x axis will comprise of another element. And then when you draw your graph, you can be able to say cross it. Like when you put your graph, you cross it to the horizontal side and mark out the figure, sorry, to the vertical side and mark out the figure right there. And if you can, from that point, cross it down to the horizontal, you can mark out the figure. Now here, if you cross it to the vertical, sorry, to the horizontal, which is this time, you see a date. And when you take it up there and cross it to the vertical axis, you see a price, that's forex, a date in the horizontal axis and a price in the vertical axis. So what is the meaning of that price and what's the meaning of this display? This display simply means that at so time, GBP JPY is what 153 equals to 0, 0. Simple, right? At a particular time, GBP JPY equals to 153.00. Now, another way to describe this is at this time, £1 costs 153.00 Japanese yen. If you check the y-axis, you can see it here written as JPY. It means these prices here are in Japanese yen. So no matter how far this chart, this price moves up or down, what it says is that £1 costs. So even if it goes down, so down, 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 what we still have like down to 0, what we still have is that £1 equals to what? 0 Japanese yen. So why is the £1 not changing? It's independent because that's the base currency. So what are we saying? The base currency is always independent. Like it's not depending on anything, but this other code currency is depending on it. So this chart is just trying to say pounds versus yen, what is happening at the moment. And when you look at it, you say, okay, right now what we can see is that £1 costs 0 Japanese yen. And this time interval is very important because if this you come and make this chart like this, it means that at this point, if you check where my pointer is, look at this point I marked. At this point, if you can trace it to the vertical axis, there should be a price to that. And that happened also at a specified time. If this time frame were to be labeled like a specified date and time, it were to be labeled, right? Good. So what of this time interval when it's made this higher point right here? What do you think to know the price, you have to trace it just like the way you normally do graph in your secondary school, right? Good. So that's how we understand economic charts. Very easy, very, very easy to understand. But now I'm going to be taking you to something else, and that's going to be called candlestick. What is candlestick? What is a candlestick? Okay. So as you know it, a candlestick is actually a candlestick. Okay, in the financial market, we all know what candlesticks are, right? Real life, physically, right? In the financial market, the candlesticks are used to represent the history or the behavior of prices in a particular period of time. But candlesticks are used in place of line charts. Now look at how I drew this, and this is called a line chart, meaning I made use of lines to draw this. Yeah, there is another way called candlestick chart. It means candlesticks. I used to draw all of that. So they combine them, candlesticks, right? Now, who invented the candlesticks? Where did it come from? It comes from Japan, when the Japanese rice sellers were using it to actually track the history of inflation of rice price over time in the year. So the candlestick, I'm going to show you the anatomy of the candlestick, like how it looks like, what it looks like, what different part of the body of the candlestick, what it actually means. Okay, so let's get into it. Oh. Okay, so let's proceed from here. So candlestick. So you have two candlesticks drawn in the front. Okay, we have the green candlestick, we have the red candlestick. So now, what are these? What role do they play in trading? How does it affect our trading? Why do people prefer candlestick charts to what line charts? Why is not line charts the way line chart looks more simpler to understand? Okay, so these whole questions, right? We're going to answer them right in this candlestick video course. Okay, so we're talking about the first candle, and the first candle is called a bull candle. It's called a bull candle. This guy bought. Yeah. This point. You have to make this. Okay, so first candle we have there is a bull candle. And the second one is the bear candle. So that's the bear candle. So what's the difference between the bull candle and the bear candle? So first of all, I'm going to ask you a question. How does the bull react to its prey? So if the bull is going to hunt its prey or to attack its prey, how does he act? Okay, if you watch the bull actually takes its prey from down in an upward direction, something of this nature. Boom, right? It takes up its prey from down to up, an upward direction. Yeah, takes its prey from down to up with its horn. So in the financial market, this means that when the price is going up, or a price of a commodity or currency pair or index, whatever it is increasing in price, like inflating, is going high. What do we say? You say it is bullish, means it's going up, right? And the second meaning of the bear you see written on my screen is used because the bear attacks its prey in a downward what? Motion. Downward motion. In a down direction. Okay, so the bull candle, like the bear now, signifies what? A downtrend, a falling trend, a reduced value, a collapse in trend. See all of these words? Just know that it sounds for downtrend, right? Going down, that's a bear. How does it react to its prey? It pounces on a prey. From up, it jumps and pounces down, or it uses its hand, but that's a downward direction noted by that move. So we know that anything bearish is downtrend, anything bearish is falling, is reducing in value. Okay, so that's why we have two types of candle: the bull candle and the bear candle. Now the bull candle and the red and the bear candle, irrespective of their colors, take note, many people customize their colors. So the official and default colors or setting of these candlesticks is red and green. Okay, so in case you look at my screen and you see green and black, this and that, just know that we have customized ours. So the bull candle, many people that even customize that uses it as either of these colors, green, blue, or white, so that they can differentiate it from the bear candle. So the candlestick is made up of the wicks, which is this small little lines you see on this candle, is known as what? The wicks. This one, this one, this one, this one. Now, the candlestick wicks helps a lot to know what's happening in the market, what's next, whether we should hop in a trade or hop out on a trade. So this wicks in the candle is one of the most important parts of the candlestick, right? So what is the name of this also? Is called wick. The same thing here, wick and wick. Now, this is called the body of the candle, and it's called the body of the candle. So now, there is something I wanted you to understand. Now, if we agree that the green candle is the bull candle, then how does it form? How do candlesticks form? All right, candlesticks form on the chart based on the time frame we are looking at. So let's say if the chart was set to a 5 minutes time frame, it means that it takes 5 minutes for each candle to successfully get formed. And if your time frame is set to 1 hour, it means each candlestick takes 1 hour to form, right? This is not about anything or the pair or whatever, but this is a normal ruling forex. So talking about the bull candle, since the bull candle right here, as you can see, I've explained that it signifies an up move. So ask yourself, where does the bull candle open from and where does it close from? So since we have agreed that these candles do not just appear on the chart, each of them form, and once the time has elapsed, it stops forming, it stops, and another candle forms immediately. Okay, let's say we're in the 15 minutes time frame. It means that, okay, every like 15 minutes time frame, it means it takes 15 minutes for a candlestick to completely form before another one. So what happens is that while the 15 minutes has not yet elapsed, you will see either of these candles shaking, going up, coming down, going up, coming down, going up, coming down, like shaking. Either it's going up or it's going down, or it's just playing up, down, up, down, up, down, up, down, up, down, till 15 minutes elapsed, another candle is formed ASAP, right? Very fast is just the way it is. So we're going to learn about the opening price of a candle and the closing price of a candle. Very, very simple. What is the opening price of a candle? Where a candle opens from is called the opening price of a candle. So if we agree that the bull candles or the bulls move upward, like have a direction to the upside, that is called bull. What does it mean? It means for it to have a direction to the upside, it needs to emanate, or the arrow has to start from bottom and point towards up, right? So this is trying to mean that whenever a bullish candle is forming, it forms from bottom to up. Like it grows up like a kid from small, keep growing, keep growing, keep growing till it grows up completely. Okay, that's how the bullish candle open and close the candlestick because of the time frame. So what about the bear candle? That's exactly the opposite. Okay. All right. So how does the bear candle form? How does the bear candle form? Now, the bear candle forms from up to down, just like a depreciation. Since we have agreed that the bear candle is synonymous with downtrend, a falling market, everything falling, right? So where does it open from? It opens from the top, right? That's how it opens, and it keeps coming down, going up, coming down, going up, coming down, trying to form a structure. Then once 15 minutes elapse, it stops and a new candle is formed. As simple as that, right? And a new candle is what? It's formed. So where is the opening price for the bull candle? The opening price is down, but it opens and start playing, then gets to this point, right? That's the opening price for bull candle is from the bottom, which is down, and the closing price for bull candle is at the top, right? You start from the bottom, get it to the top. That's how it keeps forming. Then for the bear candle, it actually forms from the top right till the bottom. Do you understand? It forms from the top till what? The bottom. Look at how it forms. So the bear candle is forming. What you see first up is just a dash, and then you start seeing a red structure coming down, down, down. Okay, why? Because it opens up and closes down, right? This is where the bear market closes because it's a red candle, you can see, and it's the opposite of the bull candle, right? Good. So if you open from here, are you getting me? If you open from here, that's the opening, sorry, that's the opening price of the bear candle, and then the closing price is way down here. So that's for now, that's what I would like you to know about candlestick. So on the charts, candlestick are even more most active because they feel, or people feel, number one, the wicks and the wicks and the structure of how bull and bear candle form and give you a hint of the next move coming up in the market. Very much reasonable than a line chart, because a line chart, trust me, a line chart will not show you what wants to happen to an extent that there is no confirmation, it's just going up and down, upside up and down, right? So that is for the candlestick. So if you look into a real-time, into a real-time chart, what you're going to see is a candle, this series of candlestick arranged. I get me. So both black, both green, my red, or what do you call it? My red is my red candle was customized into a black candle. So don't be confused. What you have on my screen is a green bullish candle and a black candle that's supposed to be the bearish red candle, but it's still bearish, and that's also the black candle. All right, so for time's sake, this is how the candlestick works. You see how they arrange it just to form this moving structure. Okay, moving structure. So that's for now, that's enough candlestick. And you can ask me a question about candlestick before I move ahead. Okay, so you can unmute yourself and ask me a question about candlestick anatomy. All right, so I'm waiting. Please unmute yourself and ask if you have any. If you don't have any, also notify. Can you hear me? Hello, 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 can you hear me? Hello? Hello? Oh my God, network. All right, just mute yourself. Let's continue. I'm hearing this voice now. It's not clear. Just push. I'm going to record this later. Let's continue. As we're saying, so I'm going to show you guys new concepts. And we're going to close this particular meeting with this, and then what's that? That's lot size. Okay, so this is a phenomenon I want to talk about, and we're going to use an everyday life to explain this. Okay, what is lot size? What is lot size? What is lot size? Now, the word lot size is a complete financial term in the forex market. As you can see, it sounds size. What could this mean? Simple, okay? So as you can hear its size, I'm going to do an explanation covering in normal everyday life, so I can get this very easily, okay? I can get this very easily. So lot size is synonymous to quantity in real life, okay? Lot size is synonymous to what? Quantity in real life. So I'm gonna make this very quick one, very quick one. So back to forex term for the moment before I switch to real life situations. So when you go to the US to change or sorry, to exchange the dollar, sorry, the naira for the dollar. Let's say you have 10,000 naira. I want to exchange it for the dollars. Normally, if the standard exchange rate is $1 cost 500 naira, which is this. If the normal standard exchange rate as this, if this is what it is, like USNGN equals 500 means $1 costs 500 naira, then 10,000 naira will be $20. 10,000 naira what? $20. So if 10,000 naira is $20, the guy doing the exchange, he included this as his exchange rate. Let's say the standard of all standard bank, the real bank charges is USDNGN equals to 400. And this guy is telling you USDNGN equals 500. So his gain there was 100 naira. So if you do a transaction of 10,000 naira, how many dollars you get, right? So how much is going to be his gain? So his gain is simply going to be how many 500s are there in 10,000 naira? So you find out that there are 20 pieces of 500 naira. So if there are 20 pieces of 500 naira, there should be 20 pieces of 100 naira profits that the guy is going to be making. So if the guy, if we are doing a 10,000 naira to dollar transaction, so 10,000 naira costs $20, that's certain. So what I'm trying to say here is that if $10 costs $20, based on this man's rates, it means he's gaining 100 naira times 20 pieces, because the real bank standard rate is 400 naira. And maybe you're too busy or you're rushing and you don't want to go to the bank, and you came across this guy and he's willing to do it, he's friendly, and then poof, you know that, okay, fine, I'll be running this with him, I don't want to waste my time and all of that stuff. You can decide to how do you call it? You can decide to, okay, I'm doing this with you, and this guy is gaining 100 naira times 20. So he's gaining 100,000 times 100 naira times 20 pieces. That's what? 2,000 naira. So if he's gaining 2,000 naira, imagine if you were to do 100,000 naira transaction. You're trying to change 100,000 naira into dollars, which is going to give you what? $200 based on his rating. So what is going to be his profit? His profit is going to be 100 naira times 200 pieces, because for every 500 he's converting, he has 100 naira inside, because normal bank rate is 400 naira to 1 USD. But he's doing 500 naira for each 500 naira in that transaction, he's getting 100 naira. So since there are 200 pieces of 500 naira in 100,000 naira, so therefore he's trying to get a gain of 100 naira in every 500, which means he has 200 pieces of 100 naira with him. So that's how much. That's going to be 20,000 naira for you to have 200 pieces of 100 naira with you. Your gain is 20,000 naira. So now, what's the difference between his former transaction and this transaction? His former transaction is that he gained 2,000 naira from it, and his second transaction, he gained 20,000 naira from it. What changed? Quantity. So the first transaction, you were doing 10K, which need 10K to dollars. Second transaction, you were turning 100K to dollars. What changed? Size. So what are we insinuating? The higher the size of the transaction, the more profits it is for the guy. Now, this is a general phenomenon for anything called business, right? So let's use an everyday life outside the financial market to explain this. So here we go. You going out to oil market to buy sachet milk. You have it in 3 forms. Either you're buying one sachet, or you're buying a roll of it, or you're buying a carton of it. I repeat, either you're buying one sachet, or you're buying a roll of it, or you're buying a carton of it. That's quantity. So let's say you are going to oil market to buy Milo, and you're coming to another place to sell it, maybe in your street. And one sachet of Milo costs 30 naira in oil mill. But in your street, one sachet of Milo costs what? 50 naira. So if you go to oil mill and just buy one sachet of Milo and bring just that one sachet to your area to sell, what's going to be your gain? Gain is going to be what? 20 naira. So let's do this imagination. What if you bought one roll of Milo? And in the roll, it contains 10 pieces. So it means you're gaining 20 naira for each sachet in it. So what is your gain? 20 naira times 10. So are you gaining 20 naira this time? No, you're gaining 200 naira. What changes is just the size, the quantity of what you're buying. So for a one sachet, you gain 20 naira, but if you increase it to one roll, and what do you have? You had what? 200 naira as a profit. Now, if you're buying the carton, you would have even more profits. So the higher the quantity, the more the profit. Now, another case scenario 2 is like this. What if after buying the Milo for 30 naira in oil mill market and you come to your house to sell it in your street, and then you say, and then you hear that, man, the price of Milo in our street, everybody is selling 30 naira. And you just bought Milo for 30 naira in oil mill, and on your way going home, the price of Milo fell. So you're now selling it how much? You just have to sell it 30 naira. How much are you losing? If it was a one sachet deal, you're going to be losing just 20 naira. But if it was a one roll deal, you'll be losing 200 naira. So what is this in business? The higher the quantity, the more exposure you are to both loss and gain, based on the fact that business is risk. So if you're losing big when you go with a high quantity. And if you're winning big when you go with a high quantity. So now this is the same thing as lot sizing, Forex. So there are 3 categories of lot sizes in Forex. And here we have the 3 of them. I'm going to write them here. And one, you have the mini lots, okay? Mini lots. Okay, we have the micro lots. The micro lots, and then we have the what? We have the standard lots. We have the standard lots. We have mini lots, micro lots, and we have the standard lots. Beautiful. So here we go. A quick one. I don't get confused. The mini lot here stands for the one sachet of Milo. The micro lot here stands for the one roll of Milo, and the standard lot here stands for the one carton of Milo. As simple as it sounds, that's just it. I repeat, the mini lot stands for what? Oh, sorry, there's a mistake. I had to interchange something. The micro should come first. So the micro is the smallest here, so it should come first. So micro, mini, standard. Micro, mini, and standard. So the micro lot comes first. So the micro lot is the one stands for like the one sachet of Milo. Mini lot stands for roll, and standard lot stands for the carton. So if you go to oil market to buy a sachet Milo and you decide to buy 2 sachets and not 1, are you categorized as somebody that bought a roll? No, you're still a sachet buyer because you just bought 2. Even if you buy 3, even if you buy 4, even if you buy 5, you are a trader or a businesswoman or man that deals on Milo in sachets, right? So the same thing as the micro lot. So in the micro lot, we have this like this written down, okay? In Forex, the micro lot is graded as 0.01, right? Figures are used to grade it. Then the mini lot is graded as what? 0.1. Standard is just 1. So please don't let this confuse you, as it's easy to understand. So for the start, when I started making an illustration with Milo, I started with 1 sachet of Milo, I started with 1 roll of Milo, and I started with 1 carton of Milo. 1 sachet, 1 roll, and 1 carton. That's what you're seeing on your screen. 0.01, the first micro lot, 0.1, mini lots, first just 1 pieces, standard lots, one pieces. So like I said, if you are buying 2 sachets, 3 sachets as a businesswoman or man, very easy to understand. It means you are still selling sachet. If you're buying 2 rolls, it means you are selling a roll and roll. You are not selling a carton yet. And if you're buying a carton, even if it's 2 carton, 3 carton, it doesn't mean you're buying trailer load. You're selling in cartons, right? But you're higher than those selling rolls and sachets. So if your micro lot is looking this 0.02, you're still trading micro lot. Understand? Yes, 0.02. That's 2 pieces of micro lots. Yes, you're still trading micro lots. And if your mini lot is 0.1, 0.2, sorry, you're still trading mini lots. Nothing changed. And if it's 2 here, you're trading 2 lots. You're still trading standard lots. That's not changed. So lot size, right? So this is the actual name we use in calling it in Forex. So now in computerized Forex, like what we do, this is not between you and any exchanger in person or physical sheet. We are trading these rights from the internet, from our homes. If you are trying to place a trade, these are the available quantity or sizing of your orders, right? And in our next video, I'm going to talk more about lot sizes, and you're going to understand some deep things about trading Forex, like based on how we do trading from the internet perspective. Because right since the beginning of this video, I've been making use of exchange, real life situations, right? Real life situations. And I'm going to tell you how we do trades from what the internet perspective, from our homes, and the platforms we use, and each and every of them, right? So that will be featured in next meeting. See you guys in next meeting. You can drop your questions on WhatsApp, and I'm going to answer with voice notes or with texts, depending what's convenient for me. Thank you for watching. I'm going to drop the video on the WhatsApp status. Good night.